Testing. 1, 2, 3. All right. Good morning. Good Monday morning. How are you guys all doing today? We are here, ready to rock and roll with the markets. Ready if you are. Are you guys ready? All right. Let's check our news. First thing in the morning. The first thing we want to do is we want to check our news. What's going on today? What's going to drive the markets? Let's look at the level 2 news. See what we got going here. Refresh. We are on UTC 7 because I am in Utah. All right. I am using a website, tradingeconomics.com/calendar. Just happens to be the calendar I'm enjoying right now. Doesn't mean anything special. It just happens to be the one I like right now. I change back and forth among other calendars as well. But if you like this one, this is a good little website. So I come by here Monday, 8 o'clock a.m., Dallas Fed Manufacturing Index, 8:30 a.m. That is Mountain Time, UTC 7. Make that adjustment for your own time frame, time zone. And category, I have all categories and countries. The only country I have listed is the United States, because we are going to be looking at the S&P. We're looking at the S&P. Up in the upper left-hand corner, we're looking for the Dow. In the bottom, in the upper right-hand corner, we got the NASDAQ 100 on a 1-minute chart down in the bottom right-hand corner, and we have the Russell 2000 on the bottom left-hand corner. So these are your stock indexes. All right, and we're going to day trade those a little bit today. And if you looked at the marquee, the little thingy on YouTube, out on the YouTubes, then it said that we were going to do scalp and trail, but we're going to do intercept orders. So we're going to do intercept orders on scalp and trail today. We're going to follow up on that nasty day that we had the other day where we got wild and crazy and lost a lot of money, traded to our heart's content, traded, went crazy trading. We're going to follow up on that day, and we're going to try and do something just a little bit different this time. Last time we went haywire crazy, right? Well, the market wasn't very good. We would have actually had a good day if the market would have run. I mean, we didn't really do anything wrong other than we over traded to the max, right? We were just over trading like crazy, trying to get into a trend. The market just never trended. But we wouldn't take our profits either. We just kept getting stopped out. So I thought we would reverse that psychology today and play around a little bit with something different. All right. I am going to, first of all, though, bring this down here, bring the screen a little larger for you guys. And I'm going to come in and I'm going to, we keep forgetting to put our options on in there. I'm going to come in and we're going to buy a call right at the money. Woo, $1,300 today. That's not what we want. Cancel. 0 DTE. All right, buy a call at the money. Is that okay? Yeah, right there. Okay, 370. And we're going to buy a put. So everybody knows that is our straddle strategy. All right, and we're just going to mark it into that. In the market, we got in right as the bell rings. So we'll see what that does to us. And we're going to also put in a little straddle. Strangle, I mean. We're going to buy a call, we'll put in a straddle. We'll just do it one out. Buy a call. No, we're not going to buy another call. We're going to buy a put. Okay, so we got a straddle and a strangle. How's that, guys? All right. I'm going to just get into that one quick. All right, a straddle and a strangle. I think we did everything right. We'll have to come down here and double check ourselves. And we're just going to let that run throughout the day. We've had good luck with straddles and strangles, haven't we? Almost every single one of them pays off. Problem with them is that when they lose, they lose almost as much money as we've made in the last 2 or 3 trades. So we can lose a lot of money because we're going to lose our cost basis if it goes wrong. And we got one in there at $807. That's going to be our straddle, and then $612 is going to be our strangle. All right. So you add those two together, that's your cost basis, and you can lose that much money. Okay, those are our positions. We can lose that much money. 807 and 6, 8, 9, 10, $1,400 is what we got on the line, and we can lose that at the end of the day if these markets don't bust out of there and make some money. So we have to come in here and we have to set them up and say, well, we don't want to have to wait for them to make full dollar amounts, although they could sometimes, but we don't do that, right? We come in here and we go in and we say liquidate. And we say liquidate once we have a little bit of money. So let's come in here and we say if it makes usually 20%, right? We just want 20% on our money. We can make 20% every day. That's pretty good money. The problem with that is that's cutting your winners short, right? So we have to keep that in mind. That's why if we cut it short, we take $122. Well, it should be relatively easy to hit it. Well, you would think, depending on whether the market moves or not, or whether it's dead. But that's the problem with why when we do lose one, it wipes us out, because if we only take it off when we make $122, and then we have one that loses, we have to have, like, if we're losing $1,800, right? Of course, that's both of them. So we take 122 off of that one. But that's the problem, is that we maybe should raise that up and have a little bit more, right? So let's go up to 25%. We could even go up to 50%, but the higher we go on net profit, we say, well, I want to have 50% profit. Well, might not hit 50%. And you're more likely to take a loser, because the higher you go on taking your money off, how much more money you want, the less likely you are to get paid off. So it changes your probabilities, right? So the probabilities of hitting 50% are a lot lower than 20%. But if you do hit 50%, you're going to get $300 out of your, $400. How much is that one? $800, right? So 300 out of $600 probably. How much are we paying for this one? Which one are we liquidating? Oh, that was the 3, 4, 5. So we got 500 and what? 70, 80, 95, $600 into it. Well, that makes sense, right? And we're going to take 300 off. So we have to win two for one, right? And we have to win 3 for 1 to actually make it profitable. So let's go in there and place our order on that one. And then we're going to go ahead and do the same thing to our straddle. Liquidate the straddle, and we're going to do the same thing. Are we going to do 50% on the straddle? It's more money. Let's do 40%. So it's easier to hit it. Now let's do 50. We're going to do 50 on both of them. See if we can get 50% out of these things. I'm going to keep running it up there. 120, we're at 17%. I could probably type it in there a little faster. So we're at 4. There's 54%. Bring it right down to 50%. There we go. All right. Can you see where I'm doing this math over here? Right there. Net margin, or net profit, 50.15%, or $400. All right. We're going to go ahead and we're going to place that order. So now we have 2 contingency orders sitting on our options telling us that if it hits those certain profit targets, it'll take them off. If it doesn't, we'll lose the full amount, right? So the probabilities of hitting 20% is a lot higher than the probabilities of hitting 50%. But if the market moves, which, we should also coordinate that with our news. If we're going to have good news, we should take more money. If we're going to have not good news, we should not take more money. And in this case, we've got Dallas Fed manufacturing coming in at 8:30, should move the market a little bit, but it's not a red. So we should probably take larger percentages on days that have red markers in them. So Wednesday should be a good day to do this and take a larger percentage. But today, where we got less percentage, right? I mean, we don't have a red marker in here, not a high probability impact. Probably won't move the market much. We should take less percentage. So we're going to put 50% in there. We'll put 50% in tomorrow, and we'll put 50% in on Wednesday, and we'll put 50% in on Thursday, and we'll put 50% in next Friday. All right, because there's reds on all of them. We're going to see how this all turns out with 50% on each one of them. That's how you learn, right? That's what we do. That's why we're here, and that's what we're going to test. So we're going to do that together. So come find out every day. Stick with me. Come back tomorrow, and we'll find out how these options did. You can put these on yourself and put them on in your own account. If you don't have a software like this that you can do this, go get some. Go get your software. Here's the software. Here's the software I use. Go over to trackandtrade.com, download. We're using the futures version. My class is actually using the stocks version right now, and we can do the same thing in the stocks version. But you can do the futures version, and maybe we ought to go over to the stocks version and do it in the stocks version too. We can do both. But this is a 0 DTE, 0 days till expiration. We're going to do that here in the futures market on the stock index. That's the S&P 500. All right. So this is the software I'm using. It's won Stocks and Commodities Annual Reader's Choice Award 7 times. This little marker down here says 6 times. I keep saying I'm going to change that, but it's actually 7 times at this point. And get your software and come and join us. All right. So, all right, back to the charts. Oh my goodness, look at the NASDAQ taking off like a rocket ship. I was going to look at that NASDAQ on a range bar 6, but it was going so fast, even in the pre-market session, that I thought we better slow it down a little bit. But we can come in and, my goodness, look at the S&P's running too. Trade. And it's not making us any money yet. Those options are still sitting there pretty quiet. All right. So we're going to come in. Let's see. We're going to, what do we want to do here? Let's look at this NASDAQ. This thing's going crazy on us, whereas the other markets are not. Notice that the range of the Russell, that's the one we kind of wanted to trade today, right? But it's not doing anything. It's just sitting there dead. Looks like the Magnificent Seven are taking off like rocket ships. What's the Magnificent Seven? Those are the MAGS in your stock market symbol. Go over to your stock market and type in MAGS, MAGS. That's the 7 biggest stocks in the NASDAQ. Apple, Amazon, Microsoft, Google, Meta, et cetera, et cetera, et cetera. All right. So what are we doing? Watching this market go without us. We need a little pullback and a little rally. Let's wait to see if we get a little pullback. We can slow this thing down a little bit or speed it up a little bit. We can look at the Dow. It's flushing. Look at the Dow flush. That's a range bar 6 on the Dow. Now I've got my settings set in here. You'll notice I'm all set up with settings number 4. All right. This is strategy number 4 in my book. So I'm going to pull this up. Get your little cameras ready. I'll give you a second. I know they're sitting right next to you. So go ahead, grab your little camera. I'm going to show you the settings. Get the little camera pulled up. You ready? Here we go. Mark, set, go. I'm going to pull up the settings for number 4. This is the strategy. All right. There we go. Sorry, moved it for you just as you were taking a picture. Here, we'll try that one more time. There we go. All right. Take your picture. Number 4, this is going to be a trailing stop. So it's going to be an intercept order with an intercept exit. All right. So in that little marquee on the YouTubes, I put in there that we're going to do intercept orders today. So we're going to intercept on the entry and we're going to intercept on the exit. Now you'll notice in here that the stop is set at 12 and the limit is set at 24. Now that's just reverse of what we did last time that we went hog wild, went crazy. Because we were doing a 1 to 2 risk versus reward ratio, right? This time we're going to do a 2 to 1 risk versus reward ratio, but we're going to intercept. So we're going to put our stop at 12 back and our stop at 12 back and our attached limit at 24. No, this is actually backwards from what I wanted to do. Hold on. Delete those little camera pictures. I got that wrong. Let's look at this one. The stop is 12. The limit is 24. Where did I go wrong in here? We were going to do a stop. We're going to do a limit at 12 and a stop at 24. How come that's wrong? Well, that'll give me a chance to change them here, and you'll see how to do that too. Good thing I caught that because that's what we were doing last time. That's a risk versus, that's a 1 to 2 risk reward ratio. I want to do a 2 to 1 risk reward ratio. Where did I screw up? 4. We were doing number 1. Which one did I want to do? I thought I had this all set up for you. Let's go look at 1. Going to do a 0 stop, and that's back to 22 again. 20. We want that to be 24 in here anyway. On this one. You can take a picture of that one too. This is our reversal strategy, remember? But that's not what we were doing. I was trying to do on this one. Let's try this. What was I doing? How come that was range 4? I thought we were doing this with a trailing 24. The stop was at Okay, I'm going to quickly change these. I want it to be a 2-to-1 risk versus reward ratio, not a 1-to-2 risk reward ratio. Because remember, we did that last time, and we we kept getting stopped out all the time because we had our stops really close, but our limits were so far away we couldn't take profits. So I thought, well, let's bring our limits in, and we'll just trail to entry, trail to exit. And so this is going to come in here, and I'm going to make this a 24 stop. All right, so the stop is going to be 24, and the limit is going to be 12. So we're going to reverse this. I think maybe what I did is I was going to do that, and then I thought, I'll show you how to do it. So that's why it's not done. Can't remember. Anyway, that's what we want to do. So we're going to come in here. We're going to set our stop at 24 and our limit at 12. Remember, our limit was before at 22. So this is going to be 50, what, 50, $55, $50, $60 profit instead of 120, 110, 120. So we're going to drop it one price bar back, and we're going to trail one price bar back, and then we're going to trail to exit at the ATR, and we're going to just trail until break even, but it shouldn't matter because break even should be about the time we take our profits. All right, I think that's the way I want to do that. All right, take a picture of that one. 1001, 1002, 1003. Should have a picture of it. Okay, so we're going to go 24 and 12. And I'm going to come down here. Now, this is the one that I want to be. This is still number 4. We're going to do all the same. This one is the one I want to have reversed from that. I want to have the stop at 24. Now, oh, see, I did right. I did do it. I did do it right there. So now I just reproduced it. Let's make this one the other way around. So let's make this one 12 and this one 24. So now we can do both. All right. That's better. I like that better. All right. So the stop is going to be 12 and our limit is going to be 24. I thought I had it set up. I just had them on the wrong. I think I'd rather have it this way. So 12 and 24, 12 and 24, limits 24. Okay. Take a picture of that one. I think that one's ready. All right. Okay. So now when we drop, we're going to drop the short one on the QOCO3 and we're going to drop the long one on QOCO4 so we can do a little bit of a scalp and trail. Oh, look at the Russell starting to pick up for us. That's a beautiful 3-drive pattern down. It's starting to try to reverse now and come back up. Let's see if that Russell wants to go. We're gonna drop our first order in on that Russell right there. See if it wants to continue up. Let's bring Russell over here. Now it's in a downtrend, so this is trying to see if this wants to reverse and go back up. Now notice that we've got, okay, see the 24 stop jumped to the ATR and it's trailing up. It's an intercept. And as it rallies, it's going to only have to go up 12 to take a profit instead of down, but it's going to get stopped out on, is it going to get stopped out on that yellow dot? It doesn't have to go nearly as far to hit our limit and take our profits. Come on, baby. Don't die on us now. Come on. What the heck? What happened to the continuation? No continuation, no follow through. This thing just died on us there too. We'll try one more time. Go with the short one. Oh, missed it. We're going to have to go with this one. Pull back, pull back. There we go. Try it one more time. See if it's going to go this time. Come on, my goodness sakes. Suddenly died. Suddenly just died. Trying to get it going up there on the Dow. Got the wrong. Get rid of that parabolic SAR. Oh, it almost hit our limit down there. Oh, it's going to stop us out too. Oh my goodness sakes, 2 in a row. Are you kidding me? This thing died right after we just decided to get in. What the heck? Ah, what the heck? No way. No way. Can you believe that? That's disappointing. Market starts to show that it wants to go and then suddenly dies right when we get in. It's trying again. It's trying again. Watch, it's going to try again. Should we take it or wait for a second? Let's wait and see. Now, this will be the time it takes off because we decide to wait. Hold on. Hold your horses. Hold your horses. My goodness sakes, look at that. It was so beautiful, making all these flat bottoms, flat tops. We thought we were going to get a nice continuation up to the magic blue rubber band. And just as we get in, 2 times it fails on us. And we just got a little tiny limit, too. All we had to do is just pop one little thing. Take the arrow, Land. Take the arrow. All right, let's take that arrow. Take the arrow. Why didn't you take the arrow? I told you to take the arrow. I was waiting for that little jab pullback. See if it wants to jab us and come back and stab us, and then we'll take this. It's not going to. Now it's just going to rock and roll. Oh, my goodness sakes. Lane, just take the arrow. Just take the arrow. Oh, hold on. Don't get your horses all tied in a knot. Wait for a second. Okay, here we go. Intercept order. Okay, we're short 1. All it's got to do is come down and test that previous low. We got our stop jumped into the yellow dot. So if it pops back and stops us out, hits that yellow dot, we have a small loss. That's why it's at 24. So we put it at 24, which is a risk of it's a 2 to 1 risk versus reward rate. Oh my hell. If I was any better at this, I'd make money. Take the arrow, Land. Okay, I take the arrow. Just take the arrows. Come on, test that previous high. Push it up there. My goodness sakes. Finally, we pull one off. Got one wiener. One wiener. At least our winner was bigger than our losers. Okay, what's going on? This is a downtrend. Lower highs and lower lows. So it's getting a little pullback here. If we think this market's going to rally and turn around and start to go up, it needs to make higher highs and higher lows. Like the Russell's doing. Russell's making higher highs now. It's just broke above this previous high. It's making higher highs. So there's our high. There's our low. So here's our previous low. So it's making higher lows and higher highs. So it's now reversed. It's now in an uptrend. That's how we know in an uptrend, right? Until it comes and starts making lower highs and lower lows. Now, look at this. This is the bow tie that didn't follow through. POS comes in here. AB is supposed to go up higher to make a full bow tie. See how wimpy that bow tie was? That's bearish. It has a wimpy bow tie. See, it ties off to the A point. Didn't go up high enough. It's supposed to go up the same distance. It's supposed to go up from this low to here to the A point. It's supposed to go up that far again. $105. Did it do it? No. Fell short of it by almost 50%. That's bearish. That's like UPOS. Move, baby, move. We don't have any news. We're operating off of a zero news day. So we do have to realize there's no catalyst to push this thing higher. We're just jumping in here with the other ding dongs that want to try and trade today without a catalyst. Usually we say no catalyst, no trade, right? No catalyst, no trade. Come on, come on. Show us something. Range 6 starting to look like it wants to be bullish here on the Dow. The NASDAQ is kind of chopping around a little bit here. It's made one nice move out of the gate, but it's a little choppy. But that's a 1 minute chart, and I'm not ready to bring it down to. Maybe we could bring it down. We can bring it down on the NASDAQ. Let's bring it down to range 6. It's not moving too much. Kind of a flat nothing burger. All right, look at the Dow. It's trying to push higher, break above the previous high. So technically speaking, if it breaks above there and holds, it should go twice the distance, right? So if we take our dollar calculator from this low right here to this high right here, $165. That means our target on this, if it can hold above there, should be, of course, that's probably because if there was a catalyst, should be up here. Now it's not going to go straight up there. It would go up, make a little pullback, right? Test that low and then go up again. So let's see if it does that. So we want to see it break through that previous high. Oh, look at the Russell. Russell's trying to trade the arrow land. Just trade the arrow. Well, I wasn't watching that market. I was up here watching this one. What about the reversal land? What if it comes back down and tests the previous low, fails on that previous high? Well, we could put a trailer in there and drop that in like this. And if it does turn and fall, we'll catch it to the downside. But we're actually we're actually bullish on this thing. We do think it's going to go up, give us a little ABC in here and go up to that next white line. Let's see if it does that. So we wouldn't really want to be doing this with this. Of course, if it goes up there and fails and turns right around and just flushes right back down, like it's been doing, this little snaky thing. Remember the little snaky thing from last week? Why do markets do snaky things? Remember the little snaky thing? Why the little market's snaky? 90% of traders buy and sell above and below previous highs, which is what causes the market to snake, right? Okay. Man alive, land. Where the heck have you been? Hindsight's easy to trade, right? Hindsight, look at this. Look at these markets go. They're so beautiful, and we're still down $35. And our options aren't doing very good. They're not going anywhere. Well, there it goes. There goes your little Fibonacci bow tie thingy. Now it needs to pull back down. But you got a reversal on there. Yeah, but just with a single, we're okay. If it goes down, we're really bullish on this market, but it's got, oh, look at all those bars up. Holy cow, this thing's going to the moon. 1, 2, 3, 4. Just take the arrows, land. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Oh, unlucky 13. We're on the 13th red green bar. That's our Fibonacci bow tie right there. It's trying to create one. This is our previous high. This is our low. That would be our high projection. Back down to our sweet spot right there. Tie off the bow tie. And see how it does. Oh my goodness sakes. Just take the arrow, land. What the heck is wrong with you? I know you guys all did. You all took the arrow, didn't you? You're all rich beyond your wildest dreams now. And here Lan is, dinking around looking for a pullback. Just take the arrow, Lan. Just take the arrow. Look at the Russell. Russell's up there beating its head against that blue line. Magic blue rubber band pulled it right back to it. How's your option doing, Lan? Don't ask. Don't ask. Oh my goodness, I'm feeling bad, FOMO. Look at the NASDAQ. Why don't you just take the arrow on the NASDAQ, Lan? Look, the NASDAQ, Lan. Take the arrow on the NASDAQ. Man, you suck at this. Come on, give me an opportunity here. Give me an opportunity. You see that, and that's you're like, you look back at that and you're like, yeah, and I'm the guy down $50. Yeah, and I'm the guy down. All right, here we go. We're taking a short. You're going to see if it follows through. The very first short's usually not the best short, but sometimes it is. I mean, it wasn't over here. Look, they took the first short, the little bounce, and the second short was the better one. The one with the arrow, land. Yeah, I know. The one with the arrow. Come on, baby. Flush, flush, flush like a toilet. We'll put a second one in there for a flush if it'll start to flush. I thought you were going to put a second one in. I did. Scalp and trail, land. Scalp and trail. Okay, it's got to break below and hold below the yellow dots, and then our stop will jump in there automatically. If it doesn't, we're doing that 1 to 2 risk, 2 to 1 risk versus reward ratio. Oh, look, it didn't close below. The bar didn't close below the yellow dots. Come on, take it. Take that first one. You can do it. It's tasty. It's like a little piece of cheese right there. Come on, rat. Come on, mousy. Take that little piece of cheese. You want it. We know you do. Come on, you're hungry. You're hungry. It's staying above those yellow dots. That second one closed above the yellow dots. That's not good. It's going to bounce back. Land's going to lose money again. Well, then why don't you do your little reversey thing? I might have to. If it reverses on us, we're going to be in trouble. We're going to have to kill the whole damn thing, go the other direction once again. Well, it is bullish. Yeah, it's a big uptrend. It's just a little pullback. I know. What happened to Snaky? Come on, Snaky. Drop below. Stay below. Stay down there. Stay down there, buddy. Go down. Go down. We don't want to have to reverse this thing. Go down there. Go down there. Suddenly it dies. Yeah, that's bullish. If it can't push down, that means nobody wants to take their profits off this thing. They're bullish. They want to go up. They want to go up. All right. It says we'll go up then. Land. You and your reversey thing. Kill those. Okay, let's see if we can get this thing to go up and just test the previous high. We got a bad situation here. We're long 3 and we got sell 5. We don't want that. Going to come in here and add in our OCO. And we're going to just have it take previous high. Now that's an even number right there. We're going to put it inside that even number. And we'll bring our stop up to there. All right. Okay, push it up there. Push it up there, buddy. It's going to say, no, I'm not going to. We'll do your reversal thingy. Oh, I didn't need to. Took it out. Well, that got all our, we're back to the green. Back into the green. We're back in the green. Green. Land's not making money, but at least he's green. Okay, here's a previous high. What's going to happen? Where's your arrow, land? Arrow's clear down there. It ain't going to throw another arrow. Why not? Went from red to green because it didn't ever break below those yellow dots. It didn't hold. See, the body's got to go below those yellow dots to get another arrow. Now it's going to come and fall back down. That's the one we should have been trailing to the short side. Let's put one on. Feeling FOMO. Hurry up. Get it in there. Get it in there for the short side. All right. Okay, it went up double top. We should get a little drop. Now we're going to test this. Oh, no. Land. What did you do? Now it's going to go long again. Do your flippy thing. All right, we'll do the flippy thing. Delete that one. Maybe we'll break above this time. Maybe we'll just die and start going sideways. Hey, you're missing the NASDAQ down there. The Russell's trying to fall. What are you up there playing on the Dow for? Why are you trading the Dow? All these other markets are doing so much better. You always go for the Dow. I like the Dow. I've always had good luck on the Dow. No, you haven't. I've watched. You always get your butt handed to you when you trade the Dow. You like the Russell. The Russell is better. You've actually had better luck on the NASDAQ. You always trade the Dow, though. I know. Flippy, flippy. Now we're back down to negative again. Just died on us. Not going to trend. Come on, buddy. We got one last try. One last try. We keep flipping back and forth, and we're going to die on this one. We're going to just take this one off if it doesn't go. Flippy, flippy. Flippy, flippy. Took us down in the... We died again. It's going now, Lan. Add another one. Add another one. Okay. Oh, you just hit way too many. You had your dumb numbers wrong. Oh, there's a rookie mistake. That rookie mistake's going to cost you. What rookie mistake? Oh, I was supposed to have just quantity 1, and I had quantity 4 in there because I was doing flippy thing. Now I'm quantity 4 short on this market that's not showing any promise to the downside. We'll take some off. Well, I'm trying to turn lemons into lemonade. If it'll go, we'll take some off. There's an arrow. Take the arrow, Lan. Just take the arrow. Come on. Touch it. Touch that rat bait. Come on. You want it. You're hungry. We know you want to touch the rat bait. Come on. Touch it. Touch it. Eat it. Eat it. Eat it. Come on. Touch the rat bait. Watch that tiny chart in the upper right-hand corner. If it starts to move back against us, we're going to just pull some off. Touch it, touch it. All 3 of them. Take the rat bait. Take it, take it, take it, take it. Take the rat bait. There it is. There it is. Eat it, eat it, eat it. Eat the cheese. Eat the cheese. You want it. I know you do. It's pulling back just as it wanted to eat the cheese. Come on, eat the cheese. What a rotten little market. Come on. Now the problem is I've got one too many in there. There we go. Got it off. It ate the cheese. How about that? Oh, now watch it go to the fall all the way down to the blue line, and we got out early. That's the name of the business, right? That's the business name. Well, we're back to $10 down. Got our money back. Let's put in a trailer for a reversal. You'll try again. If at first you don't succeed, try again. I heard somebody say that once. All right. What's that NASDAQ down there doing? Oh, this thing's trying to go long again? Probably just a minor pullback. So we'll go in here and do our little flippy thing again. For this a bad location. I don't like being in at the 50% retracement level. See that from here to here? Oftentimes market will come back, go down to the Fibonacci sweet spot just like that. And then it won't move, goes sideways, bounces around in there a little bit. We'll see if it does that today. Maybe it'll be a good one. We'll get her out of there. Get her out of there. Come on, rally. Rally. Yeah, there we go. We're getting a little rally out of it with a single contract. That's it. Single. All you got in there is one. That's all I got in there. One little baby, one little contract. Come on, touch it. Come on, you can do it. Touch that little piece of rat bait. We got it. We got it, guys. We got it. Oh, we're finally green again. How about that? Yeah, and you're down there wasting time on the NASDAQ when the Russell is looking like a champ. Look at it, the champ. Look at the champ over here. Look at that Russell. I can't trade the Nas. Well, I probably could. It's a range bar 6. It's just so big. So big. Look, that's an arrow land. Take it, take it, take it. That'd be a good run on the NASDAQ right there. That's your little ABC long up, ABC land, ABC. That one should go like a rocket ship. Here, here, here. Come on, break above that previous high. Break. You can do it. There it is. Bye, bye, bye. Break above a previous high. Hey, that rhymes. Bye, bye, bye on a break above a previous high. There it is. Bye, bye, bye. Oh, it flushed. It's failing. That's just for a second. It'll come back. Watch this. It'll go back. It'll go. It's going to go. It's going to go like a banshee. It's going to do it. Come on. Take off like a rocket ship. Go, go, go. Go, go, go. Give it a shot. If you don't ever pull the trigger, you can't ever make a win. Come on. It's going to go. It's going to go. Break above a previous high. Oh, that one's going to hurt. That one left a mark. Why didn't you do your flippy thing? If you'd have done your flippy thing, it'd have gone down. You'd made money on the downside. Well, because it's not going anywhere. It's not going up or down. It's just going sideways now. Snaky, snaky. You're over trading again, Lan. You are way over trading. I know, but these guys didn't come here to watch me sit on my hands. Can't learn anything sitting on your hands. Yeah, but are you teaching them bad habits to overtrade? Well, hopefully they listen to me. Tell them not to do this with real money. This is a way to learn how to do some of these things with real money, but just not all of them. Learn which ones are working, which ones aren't, which ones are good, which ones don't. But if you don't sit here and do it together, then we can't learn, right? That's what we got to do is we got to learn. Okay, catch it. Take the rat bait. Take the rat bait. Take the rat bait. There it is. You got it. Take it. Take it. Take it, baby. Take it. We got it. We got it. Back up in the green. All right. There was a little flag formation right there, and that one worked out for us. Right off of that blue line, which is our magic rubber band VWAP line, volume weighted average price. Breaking above a previous high right there, trying to go on the Russell. Oh, look. Take the arrows, Lan. Just pay attention. Take the arrows. There's a nice little arrow right there, a little arrow break. And that little thing took off. There's another little second opportunity. And here was our final target right up here. You think it's going to make it? Just came in a little bit late, not when we thought it would. Lan, why are you not in this thing? I was. I'm scalping. I'm scalping. I'm not trailing today. Scalp and trail. We're doing scalp and scalp today. But now you know why I like to do scalp and trail. But heck, we got to try things, right? We got to learn. We're green. Don't complain. Last time we were down $1,000 by now. Right? There's another little pullback. Nice little pullback. Is that thing going to continue? Got our final target up there at 200. I don't know if it'll go up that high. Is it going to do it? Looks like it's going to do it. There it is. Boom. Hit our target. How about that? Right through it. Let's get rid of everything now. Wow. Look at the NASDAQ go. That's good because in my real money account, I'm long the NASDAQ. Are you guys long the NASDAQ? Making money today in the NASDAQ. All right, here we go. There's our little break. What's it going to do? What's it going to do? What's it going to do? I thought you said you were over trading, Lan. Now you're not doing anything. You're just sitting here. I'm watching one up for every down. Come on, one up for every down. Red, green, red, green. We only have two colors with this strategy. If we go to the bulls and bears, we have a yellow, and then we can see a neutral. But with this one, it's just one up for every down. Red, green, red, green, red, green. It's just whether the green will go far enough to take your limit. That's it. That's the name of the game. Okay. Green, green, green. Should we take it? One up for every down. Well, little tiny green. Now it's going red. Good thing I didn't take it. Oh, Dow wants to fall. Look at that. Okay, look at that bow tie right there. Is the bow tie going to pay off? Here's your bow tie. Here's your previous high, your pullback, your rally. Coming back, touching the, it should continue higher. Or if it's a wimpy, it's going to just turn and come right back down again. Oh, look, Dow wants to go. And then Russell, I mean. Let's see if it wants to go. Go see if it'll break that previous high. It's just got to break that previous high and we'll take the rat bait. We've sucked our stop in here, our limit in here a lot closer than before. Remember we were doing 24. There we go. We popped this thing down a lot closer. So we take our profits a lot faster. So it's that, remember last time we were doing this, we were saying, Lane, you never take your profits and you always take your stops. You always get stopped out, but you don't have your loss. Well, that's because our limit was so far away, it couldn't hit it, right? Had to go a long ways. Now the market's really doing well today. So those further out limits might have been better for us, but we sucked the limits in today and we take smaller profits, but at least we're green, right? We're up 175 bucks. We're not down 2,000 like last time. Red to green, land, red to green. Take the arrows, red to green, red to green. Green to red, green to red. Take the arrows, land. Well, we got to wait for an arrow. Red to green, land, red to green. Yeah. Wait and see, wait and see. We took this one, so don't complain about it. I know it's going to the moon, but we took it. Why don't you scalp and trail, land? Scalp and trail. Catch these longer trends with a scalp and trail. You are right. Look here, it's breaking below the yellow line right here. That's a sell signal. Take the arrow, land. Take the arrow. Take the arrow, land. Oh my gosh, you missed it again. How much money was that you just missed out on? You just missed out on, that's only $90. Hey, it's $90 and it's still going. I know. I know. Red to green, land. Red to green. Take the green. Take the green. You're late on that one, man. You're late to the party. Mr. Late to the party. How come you're so late to the party? Well, if I'm that late to the party, probably not a good trend anyway. Come on, baby. Pop up there. Nope. That's why I was late to the party. I didn't think it was going to go. We're in a downtrend. We're in an uptrend. We're in a downtrend. We're in a snake trend is what we are. We're not doing anything over there. Come on, guys. Now it lost some of our big dollars. We were greener. Now we're just green. We're not greener. Look at the Russell. Wants to break below the arrows. Right there, land. Take it. Take it. Take it short. Take a short, land. Right there. Look, it's going to go. Take the short. Take the short, land. Take the short. Why aren't you taking the short? Because I don't trust it. Why? Because it's in an uptrend. Look at this nice long uptrend. Yeah, but it's 3 drives. It's drive 1. There's drive 2. There's drive 3. It's going to flush all the way back down. You should have taken it. I told you to take it. Look, it's trying to go down. I know, but it's in a big uptrend. Well, what are you waiting for? I'm waiting for it to make a top formation. I want to see it come down, prove that it's going to be bearish, rally up, stay lower, and then we can take the next one down. If it goes up and breaks that high, it's still in an uptrend. We got to get higher highs and higher lows, lower highs and lower lows. So that thing's right there. We're just going to wait and see. Now, if it goes up there and breaks above, it's still in an uptrend. Well, then take it right now. It's red to green, land, red to green. No, this is the retracement. This is the counter trend. That's the counter trend. So this is where we're going to take a short position. We'll get it in there then. Get it and get her in there. Oh, I am missing it. Oh, I am missing it. That's supposed to drop right there. It's a good thing I didn't have it in there because it's faking out. Okay, we can put it in now. Just a single to the short side. We just want to see if it wants to go. on an intercept. That's an intercept order. So it's going to trail up until it falls. If it doesn't fall, it goes long. Well, then you should have, look, it's going to break those yellow lights and it's going to go long, land. You're going to miss the long here. Yeah, but I don't think it's going to go up and break that previous high. Why? Well, look at all the other markets. Dow's falling. NASDAQ's flushing. Russell. Look, we're still down $100 on our options. I'm not worried about the options. You got 7 hours left on those things. They'll move this afternoon. Okay. Are we running out of trend here? Are we running out of trend? Running out of juice? It's trying to go higher. It's trying to break above that previous high. We got a trailing stop in here. If that fails, it'll flush. Maybe we can make an extra $1. Take the arrow, land. Now, Dow, take the arrow. No, we're in an uptrend. I don't want to take a down arrow. That's a counter trend. I'd rather put one in to trail for the long side again. There we go. We'll do that. Are you okay with that? Well, not really. Hey, at least we're at break even. Look. Oh no, we haven't even got in the market. We're looking for the reversal on the Russell. You're on 2 reversals and the market's just going without you. Okay, now we're long. We're back long on the Dow. Well, that was a stupid move. That thing's not going to go up. You got an arrow right there. That's just the pullback. I know. Look at that market go on the Russell, and you're still trying to go short. Still got a trailer to the downside. Okay, I got to be careful here on the Dow. It's not showing promise. I don't like what I see. It pops down, and watch the tiny chart in the upper right-hand corner. Red on the tape, red on the tape. Come on. Don't do that to us. Come on. Don't do that to us. Okay. Well, if at first you don't succeed, try again. Here's the NASDAQ trying to do something. Let's trail the NASDAQ for a reversal. Just a quick one there. That was stupid, land. That market's not doing anything. It's just chopping the living crap out of everybody. We got it anyway. Okay, brought us back to green, not green, just green. What are you doing? Well, on the Russell, I'm trailing for a short reversal. It's breaking above a previous high. Is it going to hold? If it breaks above that previous high and goes, we'll miss out. But hey, look at our options are moving. At least the S&P is starting to move a little bit. You're missing it on the Russell, man. That whole green trade, you've been trailing it to go the other reversal side. I know, and look, it's uptrend. That's why I kept telling you I didn't want to go that direction. That's a nice big uptrend on the Russell. These are just little red pullbacks. Pullback. Look, this little flag, that's a strong one. Little flag right there. Little flag right there. This market's trucking higher. Go full screen on that one, land. Go full screen on that one. That market's been beautiful this morning. Let's go say hi to some people. We got WC Randy. Owens RV Mobile Repair. It's great to see you, WCR Randy. Glad to have you in class. There's Larry McIntosh. Larry, the stalwart Larry, comes every day. Nice to see you, Larry. We got Bruce R., another stalwart. Nice to see you guys that all come and stay every day. It's great to see you. Hey, we got Dan Moon in here. Dan, with no catalyst, would you put an iron condor or butterflies? With no catalyst, we should be actually collecting premium, Dan. So problem is the market's rallying right now, and I like to do calls. I like to sell calls. So right now, we'll wait until about noon to put one of those on. I'll go put one of those on in my real money account this afternoon. So that's what I would do over there, Dan. So we got, I said hello to Bruce. We got Brian Johnson. Nice to see you, Brian. We got Michael Bruce and his golden calf. Great to see you, Michael. Got Kirk Schwartz. Good morning, all. We got B. Taylor. Good morning, Lane and everyone. Gary Thomas. Great to see you guys. Dan says hello. We got WC Crandy. It appears that even with a good strategy, it's still a 50-50 chance. It doesn't work out on trades. Well, you try to make it a little better than 50-50, right? And if we do the 1-to-2 risk versus reward ratio, we only have to do a 40. We can lose 4 out of every 10. We can lose 6 out of every 10 trades and still be profitable as long as we're doing a 1-to-2 risk versus reward ratio, right? Did I say that right? We can lose 6 out of every 10 trades as long as we have a 1-to-2 risk versus reward ratio. We risk 1 for every 2. Now, what I've done here is I've reversed that because remember last week we had that problem where we were losing money more than we were making money because we had our 1-to-2 risk versus reward ratio. The problem is that our reward was so far out there, the market would never push out that far and never give us our money. So we had to bring our reward in. But in doing that, I also bring my risk in. But my risk, I can't bring in too close. So I've been trailing the risk on the yellow lights and then bringing the reward in. So it's not quite so far out. I brought it in twice. I just cut it right in half. We've had a little bit better luck today. The markets have been a little bit more active. Last time we were doing this, the market was, pretty much dead. That's why we lost $4,000. And then we brought it back to $2,000. But we were trying all that stuff, right? We were experimenting. So today we experimented with a little bit different strategy, and it's been a little bit better for us. We didn't catch some of the bigger, longer runs because I didn't do any scalp and trail. But I do have that in here. I have the scalp and trail set up so we can do the scalp and trail. I just haven't been doing it. But there have been a couple of little runs in here that could have been better with the scalp and trail. I don't know. They're, like this one would have been a little bit better run. But these little shorter ones, there's no run in there. That's just scalp. That's not long enough to run. That one might have been a little bit of a run, but I don't know. The problem is it's got to get above. You have the profit box. How many of you got a copy of Pit News Magazine and read the article about the profit box? Remember the profit box? The profit box is where you get into where you get out on a trailing stop. That's your profit box. So you can do the scalp and trail, right? But the scalp oftentimes isn't much bigger than the profit box unless the market's really humping and pumping. So if it goes from the entry box to the exit box, that's $90. Well, what has our scalp been? We've got a scalp on the one we were doing last week. We were doing a scalp of 120. So it would have hit the 120. So it would have come up here. That's 120 right there, just a little bit above. So there's 120. So the scalp and trail, well, scalp would have got us 120 and the trail would have actually been smaller. So the trail would have been less than the scalp. So if we'd have scalped 2, would have made more money than a scalp and a trail. But remember the profit box. What are you talking about, profit box? The profit box is from where you get into the market to where you get out, right? And if you wait for the market to start to turn and run, well, let's say we get in right here. Usually the profit box, we use the yellow entry and the yellow exit. So that's why it's here. This is your entry, cross over the yellow dots, get out on the yellow dots. All right. So that's your profit box from the entry of the yellow dots to the exit of the yellow dots. Now, if you can get that perfect of an entry, that would have been your profit box. That would have been how much money you made. Well, where would we have got in down here? This is the profit box down here. So now we come in. Where can you get in? Let's say we could get in on a break above the previous red. So we're doing our trail and we trail out to the yellow dots. Well, that's your profit box. Profit box is how much money you would make in there. And there it is. It's only $70. Look at this one, Lan. Oh my gosh. Yeah, that's a great profit box. Sure is. That downtrend right there would have been a great profit box. We could have done a scalp and trail on that one. So our profit box would be from where we got in. Let's say we got in on the arrow. Profit box is right there. So wherever the market turns back and crosses above those, if we're trailing, right? If we're scalp and trail. So if we're trailing on those yellow dots, the profit box just keeps getting bigger and bigger as long as it's still trailing down. So as long as we're trailing those yellow dots, that's the profit box. So how big is that profit box? From this entry, if we'd have been able to get in that perfect of an entry to where it's currently trading, that's $190 with a single contract. So as long as that market continues to fall and you continue to trail, your profit box continues to get bigger. But sometimes the problem is that your profit box, you don't get those big long runs very often. Usually we're dealing with these smaller moves. And so we have to deal with, what happens when you get the smaller moves and you don't catch those big ones. What if you don't catch one of those big ones? with a scalp and trail. What if you just scalped right there? You're like, well, all I'm going to do is scalp. I'm not going to trail. Well, you'd been out with your $60, and then this thing would have gone down another $200, right? So you have to, that's why I like to do scalp and trail, because you can do both. But if the market's not moving and shaking and not making these big long trends, you try to do the scalp and trail and it ends up actually losing you money. You make less money, but eventually, you know, the idea is that you catch a long runner and you make it all back in the long runner. So how do you scalp and trail? How do you set up a scalp and trail? Well, that's why we got two buttons here. QOCO3, if I come in here and show you the settings for QOCO3, this is the strategy 4 that I've got in here. This is your trailing stop. So we're going to trail, see, price bar's back 1.1 for entry, but we got our stop set 24 back and our limit at 12. And the reason, again, the reason we have those reversed is because the stop is going to jump to the yellow dots. So even though we put it back 24, it doesn't stay there unless the market never does cross the yellow dots. So usually we don't get hit at 24, but then we're taking our profits at 12, because last time we did this, our profits were at 24 and we never hit our limit. It never did go up that far. So we had to bring that in closer, and I brought it in all the way to 12. I cut it in half, 50% of the value. So I brought it all the way down to 12 to see what would happen, right? And then we're trailing 1 bar entry, and then we're trailing the ATR to exit. So that 24 jumps to the ATR, which should be a lot less risk for the 12 reward. Now, it's probably ends up being on a typical situation. Let's see where this would have been from there to there. That's 7 ticks. So 35. So 7 ticks for, and we said 12, right? So it's still better than it's not quite a 1 to 7. 7 would have been 14, and we're at 12. So we could increase our reward to 14, and then we'd be closer to what would be on the Russell would be a 7 tick back with a 14. So if we went in and did that, we'd go to 4. Does that make sense to everybody? We're going to leave that, but we're going to take that out to 14. Now we got a true 1 to 2 risk versus reward ratio. If the 24 will jump to 7 ticks behind the market at the yellow dots, now we've got to set a 1 to 2 risk versus reward ratio rather than a 2 to 1. All right. So if we do 14 instead of 12, that might be a little bit better for us. So we're going to go ahead and change this. Let's do that. See my logic in there? Did you follow? Okay. So we're changing that to 14, but that's pushing that out there further. And the further out we put that limit, the lower probability is that it's going to get hit, right? Oh, this is our further out one. We're going to leave that one there. So what we need to do is we need to change our 4 here, and we're going to make this one 14, and we'll make this one 14. Okay. And then this one here, we're going to do that one as well. So this is going to be 14. So we got to change each one of the buttons so that we're the same on all of them. If we're going to make our adjustments, we got to make it all on a, okay. So that's setting the number 4, number 4, number 4, number 4. Okay. Just take the arrow land. Well, I was busy. I was talking to you guys. I can't be trading all the time. What's the profit box laying? That profit box ended up at right there, trailed down. It didn't get stopped out until that. So that was our profit box from that here to here. That was $200. That was a $200 profit box per contract. All right. So that's a nice profit box. What about down here? Look at this profit box. It was all the way from there to there. How big's that profit box laying? It's from here to here. $290. That's $90 more than this big red downtrend. That nice move up there was nice. But when you get a smaller one, look at the smaller profit box. If you can get in, just go from red to green, or green to red. There's our first opportunity, right? That little tiny profit box was barely $80. $80. I'll take it. I'll take it. I know you'll take it. So you can do that. You can trail these yellow dots too. We're trailing 1 price bar back. That trailing the yellow dots is a different strategy, right? Trying to trail the 1 bar back might be a little bit too tight. We're on a 1 to 1 here. So we can come in and say, well, why don't you trail just the yellow dots and just do the swing from yellow dot to yellow dot? You could do that. In fact, it's one of the strategies in here. Which one is it? If we come in here and drop down, trail ATR, trail ATR right there. Number 3 strategy. So if we come in here and set up number 3 with the same thing, we're going to go in, we'll do number 3, and we're going to say trail ATR, stop, and we're going to put that at 24, right? We decide we're going to be at 24. So we're going to say 24. And then we're going to do this one, and then trail ATR till break even. So we're going to do our stop is going to be 24. Our limit was going to be, what did I do the limit? Now I've got my brain's gone backwards on me. Number 4. Number 4. 3, 4, where did 4 go? 14. 14. So I got to go back to 3. Okay, so we're going to go 14. So our limit's going to be, we're going to set our stop. Limit at 14. We're going to put our stop at 24. So we got a 1-to-2 risk versus reward ratio. We're going to put our stop at 14. And we're going to trail ATR. So we're going to trail ATR to ATR. ATR to ATR with a limit of 14. Now this is make this our default. And then we're going to do this one. So that's the scalp. So if we come in and just drop that on there, it's going to automatically follow the yellow dots. And then it will, when the market reverses across those yellow dots, we'll take our profit at 14. And we'll have our stop, we'll jump to the yellow dots with a stop of 24. But if it crosses the yellow dots, then it'll cross the yellow dots. And then we need one that trails, right? So we need a scalp and a trail. So we'll make this one down here, number 3. We're going to make this a scalp and trail. So we're going to come in here, and this will be our trail. So we'll do the same thing. We'll go stop, and we're going to say trail, ATR for entry, and we're going to do stop. We're not going to trail ATR, and then we're going to put a stop at 24. Why does that number 3 up there say stops 20? We're supposed to be stop at 24, trail. That thing has not got the right header. We're going to make this my default and make this we're going to do a stop. This is going to be our stop and trail. This is going to be our trail out. So we're going to trail the ATR for entry. We're going to put a stop at 24. And then we're going to we're not going to put a limit. We're going to do limit 0. So our limit is going to be 0 on this one. And we're going to put our stop at 24. And we're going to trail the ATR for entry. Trail the ATR for entry, and we're going to trail the ATR for exit. So that's just a swing trade on the ATR yellow dots. So we're just going to trade the profit box. Okay. Are you going to trail to break even? No, this is going to trail out to exit all the way to the profit box. Did I do that right, guys? So that means we got to come in here and do this one again. 3. Trail ATR for entry. We're going to put our stop at 24. Oh, I did it right. I just didn't put it in the trail ATR. This we're going to trail to break even because we're going to limit out at 14. So this is our trail. Okay, everything's right on that one. Just made money on that one, didn't, because we were scalping and trailing. Okay, so now we need to come in and set up our market orders. Now, we don't really need to because the market orders are not going to be part of that. You're not going to market order into a profit box. Well, you could if you missed it. You could say, the reason we use the market orders is because we missed it, but we're not going to miss it because we're going to be trailing, right? So now you say, well, we're going to do the profit box. Okay, so you're going to drop 1 and 1. So now we got a scalp and a trail. And all we're going to do is just going to trail those yellow dots in and trail those yellow dots out. And the problem with this is that sometimes that profit box is negative. You don't have a profit box. There is no profit box. The market's not moving big enough to create a profit box. And so that's where you get your hiney handed to you, is if you keep trading when there's no profit box. In the morning session, there's oftentimes a profit box. So can you see what we're doing? We're trailing 1. I'll exit this out. And I'm going to bring these back up. Okay, get your camera out. I'm going to take a picture of this. 3. Okay, that's the setting for the one that's the scalp. So this is our new scalp setup. We're going to trail on the yellow dots, and we're going to scalp out at 14. So we're going to take a profit at 14. We were doing 12, and that was working pretty good. Last time we did 24, that wasn't working too good. It was too far away. The market didn't go 24. So we brought it into 12. That was working pretty good, but we decided we wanted a 1 to 2 risk versus reward ratio. So that's why we've gotten to 14. Okay, because when the market, we drop it at 24, but it immediately jumps to the dots, which is about 7. That's why we're going to do 7 to 14. Okay, but we are going to take this extra risk. If the market goes up and gets us in, and as it crosses those yellow dots, it could still come back down, because if it doesn't close above the yellow dots that we just got in on, it won't throw the arrow to the other side. It won't create the profit box arrows. It will just keep going, and that's where we could get stopped out at 24. So you're going to have to watch that and be careful, and if it starts to fall back, watch that little chart in the upper right-hand corner, and if it starts to lose money, then you want to jump out. Okay, so watch that 24. That's just a parachute stop. We want it to actually jump to 7. All right, so that's your photo on, get your picture on this one here. This is QOCO3, and then this is QOCO4 or 3. This is the trail side. I put the same thing. We got the attached stop. We're going to do stop ATR to ATR. The difference is we have no limit order. We're not going to scalp. We're going to trail. This is the trail to exit. That's why it's limit 0. Okay. So if we'd have done that right now, we'd have been scalped out at 12. Stop, trail, ATR. Why in the heck is that not showing me my limit? 3, 3, 3. Land, where's your limit order? Trail ATR to break even. We got to have our limit order in there. That's the one. So we're going to trail ATR, stop, trail, ATR, stop, 24. That's where we trail ATR to break even, limit 14. Okay. Let's put limit up here so we can see it better. Limit 14, trail ATR to exit to break even. All right, that makes me feel better. Now I can look over here and see that I'm limit 14, limit 0. So now I've got this set up. Did you get a picture of that change? Here, I'll pull it back up one more time. Snap another picture. Guys are gonna have to delete all the old pictures, because as we make these changes, look at that market go. Holy cow. We missed out while we were fixing stuff. Woo, what a nice run. Okay, so where's our profit box on that? Here to here. How big is that, land? From here to here. $150. Yeah, the profit box article. Oh, it's moving now. The profit box article was in Pit News Magazine. I think it was last issue, wasn't it? John David Lundberg says good morning. And we got Ben Corpus. Good morning. So we got these good stalwarts. John David Lundberg, great to have you in class. Good to see you. Ben Corpus, good to see you. Glad you guys could make it. I think I caught everybody there. All right. There we go. We're up $255 on that profit box. How come we didn't get that one? I think we scalped that one, didn't we? Didn't have our trail set up. We were doing the scalp and trail, and we were setting up the trail, and we didn't have it set up yet. That's why we missed out on that trail. So how would you do this now, Len? You're going to drop both of them at the same time. You're going to come in here and you're going to QOCO3, and you're going to drop that. That's your scalp. Then you're going to drop QOCO4. That's your trail. All right, so it's going to fill with 2. One is going to scalp out. The other one is just going to trail all the way to the break even. Now, it doesn't necessarily mean that the profit box will be bigger than the scalp. But oftentimes it is. Like in this case, it's a lot bigger. So you're going to scalp and trail. So we got both. That's why you have to have 2 buttons, one to do one strategy and one to do the other strategy, which makes one strategy, scalp and trail. And then the QOCO 1 and 2, I've just got those set up to market orders to just jump us in. And I got those set to 24 and 14 still. So those are both scalps, just on market order, buy and sell. So now we're trailing. If it reverses and goes, man, this thing's just going like a banshee. So let's go look and see what's going on over here. Look at the Dow. The Dow's doing the same thing, going like crazy. Look at the profit box on the Dow. Here's the profit box on the Dow. Entry. Now look right there. See this entry? You got an entry here. That's your entry, not here. Not where the arrow is, because it went up and spiked it. And that's why you have your 24, because it's going to hold it clear down here. Okay. So what's the profit box on there, Lan? From entry to where it's currently trading, $155. That's a nice move. All right. I will let you know how things go tomorrow on our S&P options trade. It's just dying right here in the middle. So that's not good for this type of a strategy. We need it to actually break out and run. But we've got 5 more hours for that thing to pay off. We'll see how it goes and see if that turns us red on the day. Let me pull up my spreadsheet. Let's see, small account challenge. Here we go. So here's what we got going. Now the other day we left off with a $16 loss, and I was like, I can't leave with a $16 loss. 2 losing days in a row again. That sucks. So I traded a little bit afterwards, just enough to bring us green. So we ended up with a green day on the calendar. Sorry guys, I had to do it. I couldn't just leave us with a $16 down. I took one trade. What was it? Tried to take a short position in Bitcoin at the top of the 3-drive pattern in anticipation of a fall back to the VWAP. It failed. We bailed out at negative 1650. Had a good lesson on bonds, intrinsic and extrinsic value. I really didn't want to close out the day with a loser again, so I jumped into the NASDAQ, took a quick scalp just to get green on the day, $85 profitable scalp. So that's how we ended up green on that day, $68. So we were down. Remember that we took that. We were doing those bonds, and we put an order on the Bitcoin, and it failed at 16. So I had to go in there and just scalp out some quick to bring this account back. All right, so today we get to put in here green day. We had $180, but we learned a lot today. I think this was a good day, right? We learned a lot. We've got new settings. We're going to try that tomorrow. We'll come in, and tomorrow we'll start running we're just going to do the scalp and trail strategy again, but we're going to do it on the ATR yellow dots instead of on the price bars back. And we're going to see if that doesn't perform better for us. Okay. And so let's bring this all down here. Did we make our goal? We got our green check. We made our goal today. Our goal is $107. Our max loss is $214. So technically speaking, we're supposed to stop trading if we lose $214. That's what that daily max loss is, right? So if we lose 214, which is just double of this one, so it's our daily goal. Our daily goal is 1%. We started off this account with $10,000. We goofed off here. We ended up with a whole bad day there that wiped us out pretty good, but we were trying a whole bunch of stuff. So I don't mind. It's okay. It's a learning. It's a teaching lesson. This one here, we went crazy, land caved into FOMO, tried to trade like that superhero guy he watched on the other day's YouTube channel. The only thing I did wrong was I didn't enter with 15 contracts like he does every day. I'm being facetious. Hope you guys catch that. Land was a fantastic bad example today. Learn what not to do. And so that's what we tried to reverse today, right? Really what we did wrong there is we just overtraded. But the fact was we were trying to prove proof of concept. And we had our limit out there at 24 ticks. And the market would never move 24 ticks. So we would keep getting stopped out, and we would never take our profit at 24. So that's why we dumped it today all the way down to 12. Now we've decided we're going to go out to 14 because we can do 7 on the risk, right? Because it's going to jump to the yellow dots, which was on the NASDAQ. No, it wasn't either. It was on the Russell. 7 ticks is about how far back the yellow dots were at 1.1. All right, so that's how we got to 180 today. That's better. Today's Monday. We got to make that green. This is the biggest excitement of my day, coming in here and making that green right there. Of course, we don't know. We'll have to wait and see what happens with our options, and we'll put that in here in the win-loss off-hour column. So we'll see what happens with our options, and we'll see if that stays green today. But it's being pretty dead. I don't know if we're going to get anything out of it. All right, you guys can now go along and finish out the day practicing with your trailing ATR. Enter ATR. And again, we're using 1.1 on the settings for the ATR. You see that over here, 1 and 1. That's how I've got the ATR set. Right. And we're down 267 on our options right now. That's not good. We need some movement this afternoon. We'll see. All right, there we go. We will catch you guys tomorrow. Don't be late. Class starts at 7:25 a.m. And tonight, for those of you who are in St. George, come and join me tonight at the university, 6 o'clock p.m. at the university. Second floor, Udvar Hazy building. See you there.